bank stocks so darn vulnerable every time the market rolls over? We saw it again today. The averages get hammered, and the financials were crushed. They were bent, they were spindled, and they were mutilated. The reason? Well, let's puzzle over this. Banks aren't like the cruise lines that might be banning their core customers, the elderly, for safety reasons. As I keep telling you, the last place you want to be during a pandemic is a cruise ship. It'll be a long time before the industry comes back from this. The banks aren't like the oils either, a group that's in the crosshairs of both Russia and Saudi Arabia in a vicious price war. The decline in crude was so swift that the beleaguered Occidental Petroleum's already had to shred its dividend. I'm betting others will follow. The banks aren't like the retailers or the restaurants, which are likely to suffer as fewer people go out and the stay-at-home economy takes over. They're not like the airlines with gigantic capital costs, something that comes back to bite you whenever nobody wants to travel. While the airlines are indeed better capitalized than they were in the old days, they never seem to have enough cash to tide themselves over through these periods when people stop flying. And they're certainly like the big industrials and technology companies that are finding it hard to close deals as enterprises frantically cut back on capital spending to preserve cash, and face-to-face meetings, well, now they're hard to come by. So let's see. If the banks don't have any of these problems, why are their stocks such dogs? Simple. They might not be suffering like the cruise lines or the oil producers or the retailers or the restaurants or the airlines or the industrials. But you know what all those groups have in common? They owe the banks a lot of money. And now, because of the flattened yield curve, the banks are making risky loans at what could be ridiculously low prices or interest rates. Now, let me put this in context. On Monday, one of our absolute favorite companies, but not the stock, Norwegian Cruise Lines, borrowed $675 million from J.P. Morgan. They're a client, and J.P. Morgan is going to help its clients survive through tough times and good times, as the spokesperson from the bank explained. They're good bankers. That's what they do. But what happens if the virus keeps raging and the customers don't come back to Norwegian? Filings show Norwegian has $6 billion in long-term debt. While it is a very well-run company, our government's chief epidemiologist, Dr. Tony Fauci, is saying the elderly should avoid cruises. Well, that's something that's not exactly inspiring for the elderly, or for that matter, younger people either. It doesn't help that so many of these ships seem like floating petri dishes or even hospital ships from the look at them. They're just behemoth, frightening masses. Sure, the president has pledged to help troubled industries like the cruise lines. Maybe look at low-interest loans from the government. Although I don't know whether that would fly with anyone in Congress. A bailout of the cruise lines? Some of them aren't even flagged here. I mean, I don't know. Who gets hurt? Well, I'd say it's the lenders, like J.P. Morgan. Every one of these industries takes down debt. Every one of these industries is, shall we say, suspect now. If cruise lines and restaurants and retailers and airlines and oils are in trouble, well, so are the bankers. Think of it like this. If I owe you $1 million, oh, that's a me problem. If I owe you billions of dollars, well, guess what? That's a you problem. You know what? I first read that, by the way, I was thinking Donald Trump when I was reading about him in the casinos as president. Now, you could argue the banks are scrubbed clean since the Great Recession. They have plenty of fees. They're lean as all get out. Many now have bountiful yields, but that's because their stocks have fallen so much. And if necessary, they can stop buying back stock to fund those dividends. But in the end, the ugly yield curve and the risky loans going, well, let's just say the risk of those loans going bad. Well, I mean, therefore, the stocks could be awful investments. And I've owned a couple for my charitable trust. It's crushing me. Now, it won't always be this way. Our banks are the best banks in the world. The European banks are a joke compared to ours. Our banks have oodles of cash. They were recapitalized during the Great Recession. Nevertheless, here's the problem. I cannot figure out how to value them right now with all these industries struggling that are their clients. And from the looks of things, no one else can either. Stick with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.